Today we are going to discuss the topic that is journalizing. According to NCERT textbook, this is a question number 11. Is it clear? So today we are going to discuss 7 transactions. How can we pass journal entries in these following situations? First transaction is started business with cash. So first duty is you have to identify what are the two accounts which is going to affect this transaction. First account is clearly mentioned here. Which account is this? So you can directly mention cash account first. Second account name is not given here in this transaction. You have to think, because if a person is going to start a business with the cash, you can see that he is going to invest money into the business. Is it clear? So if a person is going to invest, suppose 1 lakh rupees into the business, for that amount we are calling one name. What is the name? Very good, capital. So capital is an investment made by the proprietor. So here the two accounts are clear. One is cash account, another one is capital account. So in the previous classes we have already discussed, in order to record the transactions, the accounts we are mainly divided into 3 types. What are the types of accounts? Very good. Real account, nominal account, personal account. Real, nominal, personal. Second step is you have to classify these two accounts in any of these 3 categories. So cash account is our asset, comes under which category? Very good. Real account. Capital account will comes under personal account, because a person is going to invest. Suppose Raju is going to start, or Alan is going to start. That person is starting, correct? So capital account is related with personal account. We have already mentioned the rules. What is the rule of real account? Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. So here in the business, you have to think. We already discussed in the last class. Suppose if you are taking ABC Limited is a business name, correct? Cash is coming into the business or cash is going out from the business? Cash is coming into the business. So cash account is going to debit or credit? Debit. So entry is clear. First one topic is clear. Cash is going to debit. Second one, capital. Think from the point of view of capital. Capital accounts belongs to personal account. What is the rule? Debit the receiver, credit the giver. So here Raju is going to invest that amount into the business. So Raju is going to receive or going to give money? Going to give that amount into the business. So debit or credit? Very good. Credit the giver. So both the faces are clear. Now here you got already the debit also and the credit also. The entry is what? Cash account debtor to, very good, capital account. Is it clear? What is the transaction? Started business with the cash. Entry is cash account debtor to capital account. Done. Keep in mind. Reason is also clear, no? Very good. Keep it there. Our second transaction is purchased goods for cash. So whenever you are getting a transaction, first of all, you have to think that is this transaction is going to affect the cash or not? Is this transaction is going to affect cash? Yes, because for cash it is clearly mentioned. So directly you can take the first account. What will come? Cash account will come. Second, normally the students are going to make the mistake, or they are making the mistake related with the goods account. Is there any goods account is there in the business? No. Goods are only coming and going. When we are purchasing goods, goods is coming into the business, and when we are going for sale, goods are going out from the business. But here, when we are going to purchase, which account is going to? Very good. We have to open purchase account. So here 2 accounts are clear already. One is cash account, another one is purchase account. First account is, second account is purchase account. Cash account we have already discussed. Will comes under real account. Purchase, you have to think. Purchase is our expense or income? Expense. Expenses and losses are comes under nominal account. What is the rule? What is the rule of the nominal account? Debit all expenses and losses, credit all incomes and gains. So purchase is our belongs to nominal account, expense or income? Expense. So when you are going to purchase goods into the business, what is going to happen? Cash balance. Cash is coming into the business or cash will go from the business? Cash is going out, correct? So what is the rule? Debit or credit going out at that time? Credit, you have to credit it. Purchase is your expense. What is the rule? Debit all expenses and losses. So clear entry here itself. Debit and credits are clear. So what is the journal entry then when we are going to purchase goods for cash? Purchase account debtor to cash account because cash is going out. Purchase is our expense. Second transaction is clear. So when we are going for the third one, what is the third transaction? Very good. Sold goods to Swati rupees 5,000. So at that time, is there any transaction is happening related with the cash? ABC Limited is going to pay cash at that time? No, they only purchased goods from where? From Swati. The goods worth rupees 5,000. Are they going to pay at that time? No, they are not going to pay at that time. So here you have to find out the two account. One is sold goods. Goods account will not come. Instead of what, which account is going to affect? Not sold account. Here it is going to happen. First account is sales account will come first. Sales account. Clear? Second is a person's name. Who is the person? Swati. Very good. Swati. So two accounts are clear. One is sales account. Second one is Swati. Swati, in the name itself, we can understand Swati is related with a personal account because he is a person. Sales. Sales belongs to which category? Nominal account because sales is considered as our income. So it will comes under nominal account. Swati will comes under personal account. Next you have to think, what is the rule of nominal account? Debit all expenses and losses, credit all incomes and gains. Sales is our income, so we have to, very good, credit it, keep in mind. Swati, personal account, what is the rule? Debit the receiver, credit the giver. Who is going for sale? ABC Limited. Sold goods to whom? Sold goods to Swati. At that time, who is the receiver? Swati is the receiver. What is the rule? Debit the receiver. Very good. Here itself entry is clear, no? What is the journal entry? When we sold goods to Swati, what is the journal entry? Very good. Swati debtor because Swati is the receiver. Two, very good. Sales account because sales is our income. Credit all incomes and gains. Entry is clear. What is the next transaction? Purchased furniture. When we are going for purchase of furniture, we need to open purchase account or furniture account. Furniture account. Why? Because one rule is there. You have to keep this rule in your mind. When we are going for purchase of an asset, we cannot open purchase account. That is a rule. Then when we can open purchase account? Only at the time of purchase of goods. Then only purchase account will come. Otherwise purchase account will not come. So here what are the main two accounts? One is furniture account because it is clearly mentioned we are going, ABC Limited is going to purchase furniture. Second one is, nothing is mentioned. So second account is purchased furniture for cash. Otherwise the creditor's name should be there. Here is there any creditor's name? No. So automatically furniture account and cash account. These are the two accounts. Furniture is our asset, comes under real account. All the assets are going to include, or we can include all the assets under the category of real account. So furniture is comes under real account. Cash is we have already discussed. It comes under both are our real account. So what is the next stage? Think what is the rule of real account? Debit what comes in when we are going to purchase furniture. That means when ABC Limited is going to purchase furniture, furniture is coming into the business or furniture will go from the business. Furniture is coming into the business. Correct. So what is the rule? Debit what comes in. See, ABC Limited is going to purchase furniture. So automatically what they have to do? They want to pay amount for that. That means they have to pay cash for that. So automatically at that time what will happen in the business? Cash is going out. Credit to what? Goes out. What is the journal entry when we are going for purchase of furniture? Very good. Furniture account debtor to very good to cash account. Both are clear. Furniture account debtor to cash account. What is the transaction? Purchased furniture rupees 3000. Why we are not opening purchase account here in this question? What is the logic? Because furniture is our asset. We can open purchase account only the purchase is related with the goods. At that time only we can open purchase account. Logic is clear. Keep in mind this is another important point. Next, cash received from Swati in full settlement of rupees 4000. Full settlement case, you have to think first. What was the first transaction happened in the business related with Swati? See here, third transaction. What is the transaction? Sold goods to Swati. Clear? Who is going for sales? ABC Limited sold goods to whom? Swati. So who want to pay cash to? Swati want to pay cash to ABC Limited. Is it clear? So how much is that amount? 5000. But now she is going to give only rupees 4000. Difference is 1000. We can consider that 1000 as a discount. So first of all, you have to find out what are the two accounts related with this transaction. One is what we are going to receive. What ABC Limited cash. So first account will come cash account. Is there any doubt? Cash account is here. Second, from where we are going to receive? From Swati. So second account is Swati. Both are clear. Cash will comes under real account. Swati is personal account. Cash we are going to receive. Receiving cash. So what is the rule? Debit to what comes in. What about Swati? She is a giver or receiver? Swati is giving cash to ABC Limited, giving cash to us. So what is the rule? Giver, credit the giver. Is it clear? But extra 1000 rupees is there, right? 5000 and 4000 difference is how much? 1000. This 1000 we can call it as discount. Is it okay? Now see, when we are going to receive the journal entry, first we need to write cash account debtor. How much we are going to receive? 4000 only we are going to receive. For full settlement, right? So we need to credit Swati how much? 4 or 5? We need to credit Swati 5000 because we are going to settle her account. We debited Swati how much? 5000 when we are at the time we debited 5000. Now we credited 5000. Swati is settled. But cash account how much we are receiving? Only 4000. Shortage is there how much? 1000. So how can we treat this 1000? As the discount. So discount account debtor. One more word I am adding. Allowed or received? Discount allowed account. If you are writing discount itself here, it is clear what? Debit all expenses and losses. We are not receiving, right? We are going to lose this 1000 rupees. That's why we are debiting. Now clear no entries are. What is the journal entry for the full settlement of Swati's account? Cash account debtor 4000. Discount account debtor 1000 to Swati 5000. See, Swati I debited 5000 already. Now we credited already 5,000. So Swati account is settled. Entry is clear. The second to last transaction, that is paid rent. Here what are the two accounts? Paid rent means one is that expense name. What is that? Rent. Second one is cash. Is it clear? So when we are going to pay, think from the point of view of cash. Which account? Real account. Coming in or going out? Out. So debit or credit? Credit to what goes out. Rent belongs to which account? Real, nominal or personal? Nominal account. What is the rule? Debit all expenses and losses. Rent is an expense for the firm. So nominal account, debit or credit. Very good. Debit all expense. Entry is clear here itself. What is entry? Rent account, debtor to cash account. Ready? It's very simple. You have to understand it properly. Last transaction is paid salary. Here itself one account name is given. What is that? Salary account. Second, you have to think what we are going to pay. Cash. So second account name is cash. Nominal account. What is the rule? Nominal account, expense or income? Expense, debit or credit? Debit all expenses and losses. Cash is real account, coming in or going out? Out. So credit to what goes out. Entry is clear now from here itself. What is entry? Salary account, debtor to cash account. So here we are going to wind up. Before you are going to pass a journal entry, first of all you have to identify the transactions properly. Then you have to classify these accounts under the category of real, nominal or personal. Second stage. Third stage is, according to the rule, you can find out what is a debit and credit. Correct? In every journal entry, you can see the debit and credit. According to that, it is easy for you to pass the necessary journal entries. Okay, today itself complete your note, and rest of the questions we can complete it in our next class.